Today we are back in Toledo Island, but this time we are on the south side of Toledo Island, which is another one of the Venetian islands here in Miami Beach. Last time we were here was a couple weeks ago, and we were on that side of the island. This time we're on this side, so let's check it out. Totally new place again. I've never been here before, so I'll be just as curious to see what we find as you. One thing I never imagined when I started making all this real estate content is I never imagined that this channel would evolve into almost an insurance channel just as much as it's about real estate. And that's not because I want it to be about insurance, it's just because insurance is such a huge problem right now with real estate pretty much everywhere. And you could pretty much look at it as Florida is the poster child of the insurance problem that a lot of people are likely to face at one point or another nationwide, but this is ground zero for insurance problems. California is the quick runner-up as they're starting to see their homeowners insurance policies get dropped from a lot of the major carriers there, which is something that happened here in Florida many years ago. And one of the reasons I have to talk about homeowners insurance so often, guys, is number one, there's a lot of updates that seem to come out almost on a weekly basis these days of what's going to happen next with homeowners insurance. And that is a crucial thing to understand as somebody who's going to be buying real estate. If you own real estate or you're planning on buying real estate soon, you need to know these things because this is going to have a major impact on your monthly expenses with your property. And this is not just a Florida problem, okay? Many of you have written me over the past several months since I've been covering these insurance issues, telling me how much homeowners insurance has gone up in the state you live in, Colorado, Wisconsin, Utah, different places that you wouldn't think that the premiums would be going up by so much, but they are. And Florida is just a big extreme example of it because here, like nowhere else, we've seen so many insurance companies go out of business, pull out of the state, not agree to write any more new policies, and which leads us to right where we're at right now. So right now, the biggest news is that Citizens Insurance, which is the insurer of last resort, you guys probably know this already if you watch my channel, and for those of you who don't, Citizens Insurance is a state-run insurance company that pretty much anyone can qualify for as long as you can't get homeowners insurance with any other company within 20% of the cost of Citizens. So plain and simple, if Citizens is offering you a policy at $1,000 a year, but a private insurance company will give you that same insurance for $1,200 a year, you don't qualify for Citizens. You must take the private insurance option. Only if the private insurance costs $1,500 or something like that, then you would qualify for Citizens. But here's the biggest problem. Citizens now has ballooned in its size and the amount of policies that they carry compared to before. A few years ago, they had something like 500,000 policies. Now it's 1.3 million. The latest news with Citizens is that last week they proposed an increase across the board out of every single type of policy Citizens offers right now to the tune of about a 14% increase, okay? Get this, guys. That 14% increase is only for residential policies for owner-occupants. If you are an investor and you do not live in the property, they're proposing the state to allow homeowners insurance increases for investment properties up to 50%, guys. So imagine your homeowners insurance bill going up 50% overnight. That's what's on the table right now for anybody that has a Citizens Insurance policy. And if you say, oh, that doesn't affect me because I don't have Citizens, well, it does, because if you don't have Citizens, then likely your insurance is already more expensive than what Citizens even offers. So this affects everybody. If you live in Florida, this affects you. And of course, they're asking for this rate increase, plain and simply because it costs so much money to rebuild these homes now. The property values here in Florida have absolutely shot through the roof over the past few years. Combine that with all the natural disasters and flooding that we get here, it's a recipe for disaster. And so many people say, like, well, how come insurance was never a problem until recently? Well, up until recently, we never had the cost to build a home double, okay? Up until recently, we never had property values go up by 40, 50%. You know, up until recently, we haven't had nearly as many people living in the state. Like literally every single thing that you can throw at this problem to make insurance more expensive has happened. And then don't forget, especially for private insurance companies, the top dogs need to get their bonuses, guys. Let's not forget that that is a major part of the reason why insurance is so expensive as well, because these are for-profit companies and they're not in the business of charity. You know, they need to make sure that they're driving that new Mercedes every year. You know what I mean? And the other reason that Citizens is asking for this rate increase is because at the rate that they are getting new policies right now, because of so many other insurance companies dropping them right now, it is estimated that just by the end of 2023, they could have as many as 1.7 million policies on their hands, guys. So you're talking Citizens has, you know, quadrupled in size in basically a couple of years. That just goes to show you how bad this insurance debacle is right now and how many companies are not writing affordable policies or not writing any at all. And we talked about last week how there's already a couple private insurance companies that are going to be taking over a big chunk of Citizens policies. I think this is just the beginning of the push to get people off of Citizens, because this is becoming a huge problem that is basically spiraling out of control at this point. This is so neat how in these neighborhoods they have this one little spot where you can come out here and see the bay. So at least, you know, even if you're just some poor guy and you're not super rich like me, you can come out here and still admire this beauty. Now, another reason that so many people want to have Citizens insurance also is because they have a limit right now, at least that's how the limit is set for this year, is that it can't go up by more than 12% a year. Now, don't get me wrong, 12% is still a huge increase that it can go up by in just 1 year, but at least there is some sort of cap on it. You can't just have a policy and say, oh, you know, it's going to be up by 50% unless you have an investment property, right? This only applies if you actually live in the house. This is why I was saying, I think that this is just going to kill real estate investment here in Florida, guys. Like, insurance has become such an expense and such a burden here that I don't know how anyone can make any money on buying real estate here right now with the price that you have to pay for the home, you know, the cost to service the debt if you're not paying cash, combined with the property taxes that are higher than ever because the home values are higher than ever, and these ridiculous insurance rates. I don't know how any real estate investors can be turning profits here right now unless you bought before the prices went insane. Then you have some people from Monroe County, which is down by the Keys. Monroe County is basically all of the Florida Keys, and they're saying, wait a minute, Citizens Insurance has taken in more profit from Monroe County over the years than they've actually paid out in claims. So you guys need to reject this rate increase proposal, because we're just getting raked over the coals here, paying all these premiums, and we're not getting our money back. But that's the whole idea, guys. That's what insurance companies do. And a few of you guys who are fans of my channel actually sent me this news story, a YouTube video. Actually, Bob and Chris, thanks for sending me this. And it was about this same story that we're talking about right now, but they highlighted a woman that lives in St. Petersburg, Florida. She bought the house in 2018, right? And she has only 1,100 square foot house, okay? And when she moved into the house, the homeowner's insurance was $3,000 a year. And fast forward to today, it got raised to $6,000 a year. So it doubled in the span of about 5 years, okay? So she ended up having to get a policy with Citizens Insurance, and now she's paying $4,555 a year, which is better than $6,000 a year. Don't get me wrong, she's saving that $1,500 a year, but she's not too far away from that price point. Now, if they have this proposal where the rate can increase up to 14% on average for people, well, that would put her new premium at $5,192 a year, inching a lot closer to that $6,000 mark. And here's the kicker, guys. Here's where this gets interesting and how this is likely going to push people off of Citizens. Because if this rate increase goes through, and let's say it's 14% for someone like this, her new insurance is now $5,192 a year, right? But remember, if another company offers her a rate that's within 20% of that, even 20% higher, she has to take it, right? Well, 20% higher than $51.92 a year is $62.31 a year. So let's say a private insurance company comes around and now offers her $6,000 a year like they did before, because that's what she was paying before she got on Citizens. This woman's likely going to get kicked off of Citizens Insurance and go right back to the private insurance companies paying that $6,000 a year. This whole thing is an absolute mess. It's a nightmare. You know, it sucks dealing with this, guys. And I've shared with you guys before, you know, my condo complex has seen this increase as well. You know, our insurance premiums for our building literally doubled from 2022 to 2023, guys. We were paying $400,000 a year for 2022. This year it's $800,000, okay? And that's for the condo's master policy. That does not even include any homeowners insurance you have on your individual unit, which luckily is still pretty affordable. That's not very expensive. But of course, you know, having this huge increase with the master policy insurance makes the HOA fees shoot up as well. So there's no escaping this. That's the funny thing too. You see, people think because of this whole condo situation that, oh, everyone's gonna run to live in a house because of all the new condo rules that are about to drop in 2025 with all the reserve requirements and the repair requirements and this, that, and the other thing. Well, go ahead and run to a house, guys. See how much you're gonna pay for a house here in Florida, because they have all skyrocketed in price, first of all. See how much your property taxes are gonna be, because I can almost guarantee you they're gonna be higher than the condo. And on top of that, take a look at what your homeowner's insurance is gonna be. You think you're gonna end up saving money moving from one of these Florida condos to a Florida house? I doubt it, you know? I say 90% of the time, you're probably not going to save money. Unless you move from a very expensive area like here in Miami where I live, in one of these expensive condos, and you move to, you know, northern Florida and a more affordable area of the state, and you buy a much cheaper house with the proceeds of the sale, then yes, you can definitely save some money, even with the higher cost of homeowners insurance. But it pretty much takes a downsize or a downgrade of that level to actually have any savings right now. So to me, this whole homeowners insurance situation is about to completely explode. People are not ready for this. You know, I just saw a similar YouTube video the other day from the news over in Texas, and they were interviewing this retired guy, and he's on the brink now of maybe having to sell his house because the property taxes in Texas are completely out of control. And mind you, this guy has no mortgage, okay? No mortgage on the house, which is the goal for many people in retirement. And now it's to the point where he almost can't afford the house. And if it goes up any higher, he's gonna be forced to sell his house that he thought he was gonna be retired in and living there forever. I mean, the cost of homeownership, guys, is absolutely insane right now with everything. It seems like every week also, on top of these insurance stories, I see yet another thing that is gonna push home prices potentially even higher, or at least programs that are designed to, you know, keep the housing market on life support and just not let things go down. Because I have covered this before about the Hometown Heroes program here in Florida. It got passed last November with the vote. And basically what it is it's a second mortgage people can get if you are in law enforcement or some sort of healthcare industry here in the state of Florida, all right? And it was supposed to be exclusively for law enforcement and healthcare workers. Well, now, take a look at the latest email I got from Fairway Mortgage. Here's what it says. Tip of the week. Just a reminder that new Florida Hometown Hero program will begin on July 1st. There will no longer be a first responder professional requirement. All eligible first-time buyers who work at a Florida-based company will be able to qualify. If you know of any buyers that may want to learn about how they can receive up to $35,000 towards their down payment, please share the following registration options. Now, of course, this is a mortgage company and they're in the business of writing loans. So this is great news for them because it means more business, right? But let's stop and think about what this does, guys. Just like the Rocket Mortgage Program and the United Wholesale Mortgage Program that we talked about a few weeks ago, where they're now offering 1% down mortgages to qualified individuals, which just means that you make less money and you don't have any money. That makes you qualified to get one of these loans. Let's not forget about that. All right. This is not that different, because what this is, it also is a program that has income requirements. Your household can't make more than a certain amount of money, and there's also loan limits. So it's not like you can buy one of these $3 million houses around here with a loan like this. You only qualify to buy a house up to a certain price point, depending on which county you live in. And here's how this works, guys. It's basically a down payment assistance program. People can get up to $35,000, okay? And what it is it's a 0% non-amortizing 30-year deferred second mortgage. This second mortgage becomes due and payable in full upon sale of the property, refinancing of the first mortgage, transfer of deed, or if the homeowner no longer occupies the property as his or her primary residence. The Florida Hometown Heroes loan is not forgivable. So this is not free money, okay? This is not a grant to buy a house. This is a second mortgage on your home that can be forced to be repaid if you decide to rent it out, or if you decide to even refinance your first loan. And a lot of people are probably going to be doing that right now, right? Because, you know, folks getting in there at a 7% interest rate right now are going to be looking for the first opportunity to refinance in a few years from now, if possible. Oh, I got to pay that 35 grand back now because I refinanced. Well, yeah, and if you don't, we're going to foreclose. Come on, guys. Is anybody else seeing this, or is it just me? Because I feel like no one thinks through the consequences that these type of programs will likely have. And even as well-intentioned as they may be, whether you want to view it that way or not, it still causes massive problems when people cannot afford to pay, when they want to refinance, when they decide to turn the house into a rental, or even if, say, they live in the house for the full 30 years, right? They pay off the house. Oh, I forgot we got that extra $35,000 loan. So yeah, we got to pay that off too now. You know, we've been paying that mortgage for 30 years. You still owe an extra 35 grand, guys. It's not over yet. So this is not free money. And the other side of this is, not only is it not free money, but it also creates artificially high demand in the housing market, because it gives people that don't have much money for a down payment or the opportunity to necessarily get into this expensive market here to get in at all-time highs right now. Market's pretty much never been more expensive than this. And once again, just like 2008, unaware, unsuspecting consumers could be the ones holding the bag that actually go for these programs right now. No one cares, guys. This is the state of Florida that passes. This is not a Biden initiative. This is a Florida program. So it's happening all over the place. And I think what all this is designed to do is not really to help people. It's more to artificially keep the housing market as inflated as possible, right? That's always seems to be the ulterior motive to me, because they just don't want to see a housing market crash. And they're doing everything in their power to sort of prevent that right now by implementing programs like this. So let me know what you guys think. Do you think that a program like this Florida Hometown Heroes is going to keep the housing market artificially high? Do you think it's going to just, get more higher risk borrowers into the market that will eventually default? What do you think is going to be the end game with this? Because to me, this program is not really any different than the new FHA program, where they're going to give struggling borrowers either a 40-year mortgage, they're going to do that, or they're going to give them a second mortgage on the property that's very similar to this one that needs to be repaid when the first one is paid off or the house sells or anything like that. So this is just like a trick, right? It's more moral hazard put on the borrower in case they default. Who loses here? Not the state of Florida. They're not going to lose, because if they can't pay, house gets foreclosed, repossession. So who's really losing with this? Now, I did see one story today that might be a good alternative to all these just giving people money programs that the governments are trying to invent right now. And that is these land trust housing programs that I'd never really heard of until now. And basically what this is, it's where a nonprofit will acquire a big chunk of land somewhere and develop homes on the property. Then they'll turn around and sell these houses at way below market rate for what the houses normally go for in the neighborhood. A real world example of this is a land trust in Atlanta, Georgia. It's called the Atlanta Land Trust. A woman there, she purchased a house 3 years ago for only $102,000, and back then the median home price in Atlanta was $287,000. So you're talking almost a third of what houses actually cost in the neighborhood that some people are able to buy houses for in these land trusts. What this is it's an alternative to renting, so people aren't forced into renting their entire lives, and they actually own the house, but they don't really own the land. Now, I know I've been warning about this when it comes to the mobile home parks, but this is not really the same situation, since these are not individual owners or corporations that are looking to sell this land to the highest bidder, okay? There is a caveat to this, and of course there has to be something to it, because otherwise it sounds too good to be true, right? How can I buy a house for a third of the price? Well, the real catch is this. When you buy the house at this below market value price, in exchange, the home buyer agrees to the restrictions of buying in the land trust that limit the price that the home can be sold for in the future. So what this essentially does is something that a lot of you guys are always saying in the comments, like, oh, a home shouldn't be an investment, it should be a place to live. Well, what this land trust does is essentially that. It turns the house into a place to live. This is not an investment. You're not going to buy here and flip here, or, you know, turn around and sell it for double 2 years later. This is not what's going to happen within these land trusts. But if you actually are serious about being a homeowner and you don't want to be paying rent to somebody for many years, this is a good solution for you. But of course, the downside to this is also that one of the number one ways that all Americans build wealth is through their home ownership, guys. Let's face it, most people don't have anywhere near the amount of money they need in their 401k to actually retire, okay? That's just reality. And when they do retire, whatever they have from their 401k and Social Security is probably half of their retirement money. The other half is tied up in the equity of their home value, okay? So if you were to do this and you buy one of these properties, then you're not going to see that major appreciation over the years that normal homeowners will. But there's also a much lower barrier to entry, and you can have still the security of owning a home. Now, right now, there's not very many of these land trusts. In fact, back in 2006, there was only 162 of them nationwide. And fast forward to today, there's only 302. So out of all this time, the last 15 years, it barely doubled. So there's still not very many of them, but it could be a solution to affordable housing in the future. Personally, I think it's better to have stuff like this than just give people these second mortgages and give people free money, because all that does is prop things up artificially high and make it harder for people that actually have been responsible in saving their money and doing everything they can to become homeowners the traditional way. Same way that the new lending programs punish people that have been saving responsibly over the years, and people that put 20% down payments or higher now have to pay more fees when they get a loan versus people that put lower down payments. So like I was saying in my Everything is Upside Down video about moral hazard, this is it, guys. This is, you know, incentivizing bad behavior. It's incentivizing people to get into homes they can't really afford, but now they can with government assistance, but all the risk is on you. So the government is putting the moral hazard on you. They don't have any risk in this, okay? They give you the money. If you can't pay, they take the house. It's that simple. There's no two ways about that. But the promising thing about this investment land trust solution to affordable housing is apparently the research is showing that many people who purchase homes in these communities are actually able to get ahead in life by actually being able to save enough money to buy a home outside of the land trust. So you could think of buying a home in an area like this as sort of a stepping stone to help boost you into the next territory of buying a house in a regular neighborhood that's not in one of these land trusts, right? So the advantage of this is you're paying way less money to own a house within the land trust, and if you're smart and responsible, it's just like paying way less in rent somewhere. And because you're paying so much less each month, it affords you to save the extra money to be able to catapult you into the next level of homeownership. So I think it sounds pretty good. Let me know what you guys think about this. And in fact, I would say this is slightly better than renting, because at least you are still building some equity here, even though it's not going to be nearly as much as if you bought a regular house. I mean, when you rent, when you leave, at best you're getting your security deposit back. And at least if you bought one of these houses and you lived in it for say 10 years, and when you sell it, maybe you're only going to make like $10,000, $15,000, not going to be a huge profit, but you're going to get something back versus nothing. But then again, because the appreciation is not that good, this could end up actually costing you more money in the long run, because you're still going to be responsible for the upkeep of that home, and anybody who owns a house knows it's not cheap to maintain one. So if you're on the hook to pay for that house and, you know, make sure it has a new air conditioner and make sure that the plumbing is working okay and all the problems that come along with owning a house, and when you go to sell it, you only make 15, 20 grand, you're not going to recoup those losses that it costs to maintain the house over the years, which in that case, you could make an argument that renting would actually be the better and more profitable solution, especially if it was cheaper than buying one of these houses. It's something I wanted to bring up because I thought it was an interesting take on affordable homeownership, where the house is looked at not as an investment, but just a place to live, guys. So let me know what you think about this. If you enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.